So what is your Netflix strategy for next Monday? As you probably know, Netflix kicks off the earnings for technology companies this coming Monday on the 16th. It's going to be reporting earnings after the market closes on Monday. So what do? Do you buy puts? Do you buy calls? I'm wondering. I'm curious what your opinion is. I would appreciate it if you shared it in the comment section. Now, I'm going to show you a video real quick going specifically over some strategies in detail. And then I'm going to describe even a better strategy that we would use here at marketcrash.money. So get the details after you watch this short video clip. Thanks.
Streaming giant Netflix reporting earnings after the bell on Monday. The stock is currently up 62% year to date, with the options traders predicting some unusually big moves to come. Breaking it down is a man familiar with all the stranger things in the options market, Dom Chu. Hey, Dom.
Well, I don't know if orange really is the new black, Melissa, but I do know how Netflix has traded, at least in recent market memory, and it's been a roller coaster ride. More on that in just a bit. But let's start off with what you can expect from the headline numbers of Netflix. According to data compiled by Thomson Reuters, the company is expected to report earnings of 64 cents a share on $3.7 billion worth of revenue. As we've learned in previous quarters, subscriber growth and international streaming growth numbers are going to be the big metrics to watch as traders really dig into this earnings report. That brings us to the anticipated trading action. Over the course of the past 8 earnings reports, Netflix stock has been a bit of a coin toss on a positive or negative day following earnings. You got 4 up and 4 down. During that span, shares have moved up or down by an average of 8.5%, with double-digit percentage moves up or down in 5 of those 8 reports. As of now, we are seeing the options market pricing in an approximate 10% move in either direction. Melissa, traders will be looking to see if they can remain unbreakable in the wake of Netflix earnings, whether their name is Kimmy Schmidt or not. Back over to you.
Thanks, Dom Chu. So if you want to trade Netflix into earnings, how can you use options to put the odds of success in your favor? Mike Kyle is at the Plasma with a very special call to action. Hey, Mike.
All right, we got a great topic. We're going to be talking about how to use probabilities. But the first thing I would point out is that we still have to keep some of the other fundamentals we want to pay attention to in mind. So the first thing we obviously want to know is the stock going to go up? Is it going to go down? Or is it going to go sideways? Where's the stock going to go? The second thing is, how much do we think it's going to move? A little or a lot? And finally, how much can you make or lose on your trade? These things are going to be important as we take a look at this. So we're taking a look at Netflix. We can see, obviously, here that the stock is actually not that far off of its highs. And, you know, this is, I think, kind of a coin toss here, which way it could go. We've had some very good and some very bad earnings results. But I don't really like the way the market feels right here based on how we closed out the week. So let's take a look at the trade that I identified. Specifically, I'm looking at the April 310-290 put spread. Paid $13.75 for these, sell these for $3. I'm spending $10.75 for a trade that can be worth, if it goes all the way to that lower strike, $35. Let's pay attention to that. Okay, so now we're going to take a look at some of the probabilities. Hey, here's a good-looking guy. Okay, so 98% chance that the stock gets to the strike that we're buying, the 310s. 79% chance that it gets to the break-even, okay? And it's a 36% chance that it gets all the way to that strike where we make the most money. But think about this. This is better than a 1 in 3 chance, and it's going to be worth $35 if it gets there. We spent just over 10 to do that, all right? So we can basically say 36% times 35%. I think this trade is worth $12.75, and I'm only paying $10.75 for it. So I like the odds of this trade. I think this is the way you make a play in a Netflix earnings.
How do you think about this trade?
So it's really important, and we don't talk about probabilities that often, and we should more so. But one of the things that's really interesting is that, you know, to me, probability has a lot to do with conviction, too. So how convicted you are in a trade means sometimes, like, how far you're going to reach and what the probability of that reach when Mike's talking about. So in this situation, Mike's buying a very high probability put, and he's selling a much lower probability put on the end of his put spread, and that's really the way to do it, because he's basically saying, I think there's a low probability it goes through 275, you know, to the downside here, but I really want to kind of capture that mid-range here, and you're trying to put the odds in your favor here. So I like the way you're thinking about it, and if you're convicted, then you have a very high probability of success.
You know, if you don't know how much you think how much a stock might move going into a catalyst like earnings, The options market's actually going to tell you that. As Don just pointed out, we're expecting about a 10% move. It's $313 stock or whatever it was the last time I looked at this thing. So 10%, about 30 bucks. That's kind of how we select those strikes. And the other thing I would point out is that in this particular instance, we're dealing with options that happen to expire 1 week from today. So it's basically going to be win, lose, or draw. We're going to know the answer by this time next week.
For me, I don't want to do it either long or short. Sometimes inflection points, I think, are very identifiable, where one could say, wow, this is well-defined tops at common level, we could break out, or it's a sell off the trend, it's undercut or bounce. For me, this is 50-50. And sometimes things are 50-50. Now, it might not be what you're thinking, but from the technical point of view, does this pop on earnings? Sure. Does it drop on earnings? Sometimes we're willing to do those, but not this one.
It's tricky. Harder probability or your probability?
Well, it does. This is one of those situations where, with the coin toss, if the move is 10%, this is still a good trade. If it's a 50% chance that it makes a move of 10%, this trade's a winner.
So as you probably noticed, at the very end, they're talking about how this trade is either going to be a winning trade or not a winning trade. So clearly, their trade is a good trade if Netflix falls, and then the greatness of the trade and the profitability of it is determined by how much Netflix shares are actually going to fall. Well, what if Netflix shares are actually going to rise? Well, then you would occur a definite loss. So to me, when I look at putting option strategies, I have a number one rule that I have been able to follow over the years that have been able to really increase my returns and save me from making very elementary mistakes. In this particular case, I would not buy any options before Netflix reports earnings. And there is a number of reasons for that, and I'll just give you a couple real quick. Number one, the options are going to be extremely inflated. In other words, right before the earnings, you're going to end up paying a lot. You're going to end up paying a bunch. And in the event the stock does not go anywhere, regardless of whether you're predicting that Netflix share price is going to skyrocket or drop drastically, you will end up losing simply because your options are going to deflate like balloons no matter which side of the equation you're trying to profit from. So that's number one. And the number one thing goes in line with what we preach here at Market Crash Money. Your cost of entry really makes a difference in the percentage returns of your trade. So in other words, if you're buying an option, as in this example described, for $10 roughly, and if the stock goes nowhere, your option may worth $1 the next morning, $2. So you lose very quickly 80-90% of your trade. Now, what is the obvious reason to avoid being in such a situation? Well, from the standpoint of probability, which they did talk a lot about, the best probability is not betting against the earnings right before the company reports. Because again, it's not just a 50% chance. The 50% chance if the stock only had an opportunity to go up or down. Now, again, the third possibility is it may not go anywhere. And in this case, if you ever, been at a roulette table, and a lot of people bet on black or red, thinking that, it's either going to be either or. In other words, a 50-50. Well, what about the chance of a 0 or a double 0? Well, in that reality, your chances are actually significantly less than 50-50. So hopefully that analogy is making some sense to some of you out there. And just remember, to increase your probability, the number one strategy to increase your probability is to first weight which direction the company will be moving the following day after earnings. You will be able to buy the options as a significant discount compared to the previous day. And therefore, you will be able to multiply and increase your percentage return. On top of that, it is no longer a 50% chance, because by that time you will know exactly which direction the stock will be moving. So if we're talking about this trade from the standpoint of probabilities, you will have a much better probability of putting a much more successful trade if you simply wait and watch how the market responds to Netflix reporting earnings. And then Tuesday morning, you will be able to get a bargain on these options in relation to what they're going to be priced at Monday. Now, if you'd like to get more information about specific strategies that we are placing here at marketcrash.money for some of the companies that are reporting earnings next week, okay, definitely schedule your one-on-one session with me by clicking right here, How to Profit. Take action now. The earnings season is about to start. There's going to be a ton of opportunity. And if you'd like to know specifically what strategies will produce the biggest returns, we will share our ideas with you. So schedule your one-on-one session, get ready for this earnings season, and do it now. Make your 2018 the most profitable year ever.